country is approximately 2%, making it one of the lowest in the region. So we take a look at how technology and innovation is reshaping the industry in AM Business this morning.
With a penetration rate of just 2%, insurance in Ghana is stumpy. According to the National Insurance Commission, the sector contributes just a little over 1% to GDP. As everyday individuals, we are all in one form of risk or the other in forms of accidents and dangers. Likewise, are your homes and your business is also at risk from burglary, fires, etc. Insurance policies come in here to help you get some form of cushion should you find yourself in such unforeseen circumstances. Now, per industry standard, the ideal rate is 10 to 11% penetration for every developing country. In Ghana, we have just 2% penetration rate. What it implies is that should there be any trouble or any kind of unforeseen circumstances for an individual, only 2 out of 100 Ghanaians have any form of insurance to protect them or to cushion them. Insurance is explained in simple terms as an arrangement by which a company or the state undertakes to provide compensation for a specified loss, damage, illness or death in return for payment of a stated premium. Examples of insurance policies include health insurance, motor insurance and life insurance. Despite the relief it provides, few Ghanaians are signed on to one form of policy or another.
What is causing a low penetration? First and foremost is education, lack of education. And what's causing lack of education? Maybe we insurance practitioners are not educating potential clients enough. Maybe the government is not doing that enough. Liquidity is low, I must say. Liquidity is low. Insurance is not your first investment tool. So people will take it later when there's high liquidity, and so liquidity is low. That could also be the second reason why penetration is low. The third reason also is the fact that we do not have interesting products as insurers. I mean, our products are very rigid. Some of our products do not satisfy the needs of potential clients. So that could be the third reason why penetration is low.
Between 2010 and 2014, the insurance industry saw a 28.2% annual growth rate. But the sector looks promising with evidence of economic growth and an increasing middle class, not forgetting the role of innovation.
It's good to be insured. That is why it's compulsory that we insure our cars, we insure our houses and stuff. Personally, I believe in paying SNET and insuring yourself through the system, through SNET. So it's good.
Anything can happen. So in case something happens and you have maybe life insurance or something, you can be assured that definitely you get some compensation or something to help you out.
There have been deliberate attempts to increase awareness among the populace. Mobile insurance, for instance, has gained popularity, and as of June 2015, the country recorded a total of 2.5 million mobile insurance policyholders, thanks to telcos, social media, and on-the-ground agents.
A lot of we practitioners are looking at, and many have employed new ways through technology. I mean, I know claims are being administered online now. Claim payment is being done through mobile money now. Request for policies and policy documents is being done online now, and that is the in thing now. So technology is helping. Technology is improving claims, but it's also important to know that technology can increase penetration in a certain market segment, and that market segment still needs to be educated. And that's where we need, first and foremost, to use technology to educate people. And it's by using technology to educate people, first and foremost. Then we can move on in using technology to increase penetration. And that's what most people are doing. Most insurance companies are blogging now, are giving insurance information. I know a lot of blogs, insurance and SEM and so on going on now. And it's all the education part. I know most insurance companies have Facebook pages that they send information up. So most people have realized that education is key. education is core to our penetration. And so technology, first and foremost, is being taken advantage. Yes, but we're doing that by using it to educate our people.
The mobile networks presents a very huge opportunity, actually, for the insurance companies to leverage on that platform to reach these people with the insurance products. And so as an example, you have Tigo, okay, selling insurance products to their customers. You have currently, there's also another collaboration between Glyco and then MTN, insuring. And so there is that concerted effort, if you like, for these companies to reach people using that platform. And so that is also in its infancy, but hopefully if we push the frontiers, we think that the telcos with their insurance partners can also reach more people with affordable insurance products. I'm also aware that the early part of this year, for instance, the regulator approved a pilot program for the use of dry signature or voice signature. So everybody in the industry, the regulator, the players, everybody's hands is on deck. Everybody's hands is on deck, actually, to help push insurance frontiers in Ghana as it stands now.
Bank assurance was also introduced in 2007 to allow banks sell insurance products to clients alongside their traditional banking products. So talk of innovative ways of improving the insurance penetration in Ghana is the introduction of bank assurance, like that here. Now, what is bank assurance? Is derived from the French word banque and assurance, meaning bank and assurance. So for you, what it implies is that insurance companies are tapping into banks, the clientele base of banks, to be able to rope in more people into the insurance policies that are available. So for you as a client, what it means is that you can just walk into your bank and also apply or subscribe to any insurance policy. What you might benefit from this is that it is designed to be much cheaper than an agent walking to you for you to sign onto a policy, or you going into an insurance company to sign onto a policy. Bank assurance has provided increased visibility for the banked population, which primarily comprises the middle and upper income segments of the populace.
So basically, bank assurance is a collaboration between the banks and insurance companies. And the banks are selling insurance to their customers. Now, what bank assurance can do to increase insurance penetration, or to assist in doing that, is that now the insurance company that partners the bank has access to the customers of the bank, and so they can reach them with insurance products, which perhaps could have been difficult for the insurance companies alone reaching these customers. And don't also forget that largely the banks have a very large footprint. They have many branches across the country, which the insurance companies do not. And so they can leverage on that to be able to reach all these customers in all these scattered areas to sell insurance to them. In that way, we are saying that bank assurance can help, increase insurance penetration in the country.
Bank assurance brings that convenience that we need. And the convenience is creating a one-shop financial services market where you can do your banking, you can do your insurance, you can do other financial, you can take advantage of other financial services by walking into a bank. So bank assurance has increased convenience for the potential client. Bank assurance should be a mutually beneficial arrangement between the insurance companies and the banks. Currently, the banks may not be benefiting so much from bank assurance because their only source of revenue is the commission bit. And if you compare the commission bit to their interest revenue, the interest revenue far exceeds the commission bit. So insurance companies need to do more. Insurance companies need to create new bank assurance arrangements that will be mutually beneficial to the banks.
In recent times, the regulator has announced a series of reforms that aim to accelerate the development of the sector. Talk of increments in capital requirements, as well as measures to ensure prompt payment of claims.
The Commission would actually enforce the rules to the teeth. Sometimes when you apply the rules, people don't like it, but it's actually for their own good. The Commission's responsibility is not only to the shareholders, but also to the ordinary people on the street, the insurers and the innocent third parties. So we owe it upon ourselves to make sure that companies that operate in the system are really solvent enough to handle, to pay claims that will come their way.
Despite these reforms by the National Insurance Commission and interest shown in the markets by foreigners, stakeholders believe there's room for more growth.
For instance, you would agree that the current generation is the most digitized generation that we have. And so when we talk of innovation, I mentioned products. We're looking also at the channel, pushing products on that platform for people. And it's convenient, really, because smartphone, if you check the mobile phone penetration in Ghana alone, according to statistics, there are about 4 or 5 mobile phones to a Ghanaian, you know. And so you find that it's everywhere. And this is the platform that we think that we should channel products to people. And it's convenient. And once they have that convenience, they will be able to buy the insurance as we want it, and that will go a long way to promote and push the insurance penetration in the country.
With the right reforms and policies, the industry is bound to make positive headways. This is confirmed by Ernst & Young's survey in insurance opportunities in sub-Saharan Africa, which ranked Ghana among countries with the highest potential for growth in insurance premiums. The 2017 edition of the Oxford Business Group report has also projected an annual growth rate of 8.5% for the sector in Ghana between 2014 and 2018.
That's it for AM Business. I hope that you did enjoy this week's edition. Join us next week, Wednesday, for another AM Business.